Preparing for a banking interview at Rajhi Bank interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Walk me through your background and explain why you want a banking role at Rajhi Bank. I would present my background as a progression toward banking, not a list of jobs. My interest is in roles where financial analysis, customer service, controls, and commercial judgment come together. Rajhi attracts me because it combines strong Saudi market presence with a clear Islamic banking identity and major digital investment. I want to build technical banking skills while contributing to a franchise known for trust, scale, and disciplined execution. While answering, focus on a structured career story, relevant finance or customer experience, interest in Islamic banking, and why Rajhi's scale, reputation, and Saudi market leadership fit your goals. Question 2. Why do you want to work for Rajhi Bank specifically? I would connect Rajhi's scale with its clear identity as a leading Islamic bank. It has a strong retail franchise, deep Saudi market presence, and growing digital capabilities, so the learning curve is attractive. I would also mention that its Sharia-compliant model aligns banking activity with real economic transactions and customer trust. For me, the opportunity is to contribute to disciplined growth while learning within one of the region's most respected financial institutions. Make sure to cover Rajhi's leading Islamic banking position, Saudi retail strength, digital transformation, Sharia-compliant model, and how your skills match a customer-focused, regulated banking environment. Question 3. What is the difference between Islamic banking and conventional banking? The core difference is how return is generated. In conventional banking, interest is charged on money lent. In Islamic banking, financing must be linked to permissible assets or services, with profit earned through structures such as Murabaha, Ijara, or Musharaka. I would stress that Sharia compliance is not only legal form, it also affects documentation, risk sharing, product approval, and customer communication. At Rajhi, that distinction is central to the brand. In your answer, talk about prohibition of interest, asset-backed financing, Sharia governance, risk-sharing principles, permissible activities, and how products must create profit through trade, lease, or partnership structures. Question 4. Can you explain Murabaha and how a bank earns profit from it? Murabaha is a cost-plus sale, not a cash loan with interest. For example, if a customer needs an asset, the bank purchases it first, then sells it to the customer at a disclosed markup payable over time. The profit is agreed upfront and linked to a real asset transaction. The key risks are customer creditworthiness, proper documentation, and ensuring the bank genuinely takes ownership before sale. That is what makes the structure Sharia compliant. Be sure to mention cost-plus sale mechanics, bank ownership of the asset, disclosed profit margin, payment schedule, Sharia approval, credit risk, and why it differs from simply charging interest. Question 5. How would you assess whether a customer should be approved for financing? I would start with repayment capacity, because financing should be sustainable for both the customer and the bank. For an individual, I would review salary, employment stability, existing obligations, credit bureau history, debt burden ratio, and the financing purpose. For a business, I would add cash flows, leverage, margins, bank statements, collateral, and management quality. Approval should never rely on one metric. It should combine quantitative analysis with prudent judgment and policy compliance. While answering, focus on ability to repay, income stability, debt burden ratio, collateral, credit history, purpose of financing, documentation quality, regulatory limits, and responsible lending standards. Question 6. What are the main financial statements of a bank, and what would you look at first? For a bank, I would first look at the balance sheet because banking is fundamentally about managing assets, funding, liquidity, and capital. On the asset side, I would review financing growth, investment securities, and asset quality. On the liability side, I would examine customer deposits and funding mix. Then I would move to profitability, net financing income, fees, operating costs, and impairments. Finally, I would connect those numbers to capital adequacy and liquidity strength. Make sure to cover balance sheet structure, financing assets, deposits or customer accounts, income statement drivers, impairment charges, capital, liquidity, profitability ratios, and asset quality indicators. Question 7. How does International Financial Reporting Standards 9 affect provisioning for financing losses? International Financial Reporting Standards 9 requires banks to recognize expected credit losses earlier, not only after a default occurs. Performing exposures are usually Stage 1, with a 12-month expected credit loss. If credit risk increases significantly, they move to Stage 2 and require lifetime expected losses. Stage 3 covers credit-impaired assets. The model uses probability of default, loss given default, exposure at default, and macroeconomic assumptions. Higher provisions reduce profit, but strengthen balance sheet transparency. In your answer, talk about expected credit loss, Stage 1, Stage 2, Stage 3, probability of default, loss given default, forward-looking information, and impact on profit. Question 8. What is capital adequacy, and why is it important for a bank like Al-Rajhi? Capital adequacy measures whether a bank has enough capital to absorb losses relative to the risks it takes. It is usually assessed against risk-weighted assets under Basel and local regulatory requirements. For Al-Rajhi, strong capital supports customer confidence, regulatory compliance, and the ability to grow financing without taking excessive balance sheet risk. I would also explain that capital is not just a compliance number. It is a buffer protecting depositors, shareholders, and the financial system. Be sure to mention regulatory capital, risk-weighted assets, Basel framework, loss absorption, depositor confidence, growth capacity, SAMA oversight, and why strong capital supports stability. Question 9. How would you explain liquidity risk in a bank? Liquidity risk is the risk that a bank cannot meet cash obligations when due, even if it is solvent on paper. Banks fund longer-term financing with customer deposits and other liabilities, so maturity mismatch must be managed carefully. I would look at deposit stability, high-quality liquid assets, funding concentration, and stress outflow assumptions. Strong liquidity management protects daily operations, customer confidence, and regulatory standing, especially during market volatility or sudden withdrawal pressure. While answering, focus on ability to meet obligations, customer withdrawals, funding concentration, liquid assets, maturity mismatch, stress scenarios, regulatory ratios, and Treasury or ALM monitoring. Question 10. What do KYC and AML mean in a bank branch or operations role? KYC means knowing who the customer is, why they need the account or product, and whether their activity makes sense. AML is about preventing the bank from being used for money laundering, terrorism financing, or sanctions breaches. In practice, I would verify identity, understand source of funds, screen against required lists, monitor unusual transactions, and escalate concerns. The commercial target never overrides compliance, because one weak control can create serious regulatory and reputational damage. Make sure to cover customer identification, beneficial ownership, source of funds, transaction monitoring, sanction screening, suspicious activity escalation, regulatory compliance, and the importance of not bypassing controls. Question 11. How would you handle an angry customer who says a banking fee or charge is unfair? I would first let the customer explain the issue without interruption, because frustration often reduces once they feel heard. Then I would verify the transaction, product terms, and any applicable fee schedule before giving an answer. If the charge is correct, I would explain it clearly and professionally. If there is an error, I would initiate correction through the proper process. Either way, I would document the case and escalate if policy or customer impact requires it. In your answer, talk about listening calmly, checking facts, explaining terms transparently, following bank policy, offering solutions, documenting the interaction, and escalating when necessary. Question 12. How do you balance sales targets with ethical and Sharia-compliant banking? Sales in banking should be needs-based, not pressure-based. I would first understand the customer's situation, then recommend only products that are suitable, approved, and clearly explained. In an Islamic bank, transparency on profit rate, fees, structure, and obligations is especially important because trust is part of the value proposition. A short-term sale that creates complaints or repayment stress is not good business. Ethical selling protects the customer, the bank, and long-term revenue. Be sure to mention suitability, transparency, customer needs, product eligibility, disclosure of profit rates and fees, avoiding mis-selling, Sharia controls, and long-term relationship value. Question 13. What digital banking trends are important for Rajhi Bank? Digital banking matters because customers expect speed, convenience, and security at the same time. For Rajhi, mobile banking, digital account opening, instant payments, automation, and data-driven personalization are key areas. I would also highlight cybersecurity and fraud controls because faster channels create new risk points. The winners are banks that make routine transactions seamless while keeping trust intact. Digital transformation should reduce friction, improve service, and strengthen control quality. While answering, focus on mobile banking, digital onboarding, payments, cybersecurity, data analytics, customer experience, automation, fintech competition, and maintaining controls in a faster digital environment. Question 14. Tell me about a time you found an error or control issue. What did you do? I would answer using a clear star structure. In one example, I noticed a reconciliation difference between a report and supporting records before submission. I rechecked the source data, identified a mapping error, informed my supervisor, and helped correct the file before it affected reporting. The lesson is that small control breaks can become large issues if ignored. I try to be detail-oriented, escalate early, and focus on fixing the process, not assigning blame. Make sure to use the STAR method. Describe the control weakness, quantify potential impact if possible, explain escalation and correction, and show ownership without blaming others. Question 15. How does Saudi Vision 2030 affect banks and financial services in Saudi Arabia? Vision 2030 creates growth opportunities for banks by expanding the non-oil economy, supporting SMEs, increasing home ownership, developing capital markets, and pushing digital payments. For Rajhi, that means more demand for Sharia-compliant financing, transaction banking, savings products, and digital services. It also means banks must manage risk carefully as new sectors grow. I would frame Vision 2030 as both a revenue opportunity and a responsibility to support sustainable national economic development. In your answer, talk about economic diversification, SME financing, digital payments, housing finance, capital markets development, financial inclusion, privatization, and opportunities for banks supporting growth. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.